Hey, what's up, everyone? Rosario here, and welcome to Modern Finance. The past 2 days have given rise to headlines that have made me elated and subsequently devastated about the future for crypto. If you're following along with mainstream media, you probably haven't heard either of these things. But in my opinion, these two headlines could shape the future for Bitcoin and crypto in Canada and the US. In this video, I'm going to tell you what these events mean for your portfolio, and I'm also going to explain how you can use these events to your advantage to grow your wealth. If you're interested in growing and preserving your wealth and want to know how to protect yourself from catastrophes in the crypto space, stay tuned. Let's begin. The first story hits close to home right here in Canada, but it could just as easily spill over to the US. So if you're watching from there, pay attention because this will probably happen to you at some point too. Here's a summary. It looks like the Canadian and American governments are feeling afraid of losing control. Just today, Coinbase Canada has announced that all crypto transactions over $1,000 Canadian will require you to specify the name and address of the person you're sending the funds to. If that sounds like a complete kick in the head to crypto enthusiasts, it is. Basically, you'll be telling the government who you send your crypto to every time you make a transaction. If they don't like what you're buying, your transaction could be blocked, delayed, denied, or worse. One of the reasons that cryptocurrencies have value is that they're able to be transacted in a way that is generally free from government oversight. Unfortunately, this terrifies governments. The stated reason that they use for this terror is that it scares them because crypto could be used to finance terrorism or could be used to launder money for criminal enterprises. I think the real reason that crypto is triggering governments is that it has the potential to take away their core power. That is, the monopoly power to control the money supply. The Canadian government has the sole authority to issue Canadian dollar denominated debt. According to MMT, modern monetary theory, which is an evolution of Keynesian economics, much of a government's power comes from its ability to have a monopoly over the money supply. Bitcoin and crypto in general have been largely outside of this sphere of influence, and the people in power have had enough. They want control back. As the Canadian and US governments gear up to regulate cryptocurrencies and likely to create their own CBDCs, central bank digital currencies, there's a good chance that they'll try to make using crypto as a substitute for dollars, CAD or USD, more and more cumbersome, or at least much easier for them to track and shut down. During the protests in Canada earlier this month and last month, the government ordered crypto exchanges to ban transactions from certain addresses. That's the first time, to my knowledge, that the government has done that. There's some good news here, and that's that they can't really apply this regulation to individual wallet holders, only exchanges and entities that act like a crypto bank, because frankly, it would just be too difficult to enforce. So the government can tell Coinbase and Binance to report the receiver of all transactions over $1,000, but they can't really tell a private wallet holder to do it. It's just too complicated and they wouldn't know who to ask. So what I'm doing is, I'm no longer keeping any significant amount of crypto in an exchange. Exchanges are great if you're looking to get a return on your crypto. Celsius.com, for example, allows you to earn 5% interest on your Bitcoin that you keep with them. The reason for this is that your Bitcoin isn't actually in your account. It's acting just like a bank when it loans out your Bitcoin on deposit to other entities and pays you for the privilege of them using your Bitcoin. This is great in theory, but if a whole bunch of people want their Bitcoin at once, it could produce a phenomenon akin to a 1929 bank run, immediately bankrupting the exchange and leaving you without any of your hard-earned crypto. Anytime you're earning a return on your funds, you have to realize that you're taking a risk. The risk here is that the exchange defaults and you don't get your money back. As Elon says, if you don't have the private key, you don't really own your crypto. That's true for almost all crypto exchanges, and even more so now that the government is going to track every single thing you spend your crypto on. I don't even think they do that with regular banks. So I'm putting my crypto, that's not being used to earn interest at least, inside of a hardware wallet. I own the wallet, I know the wallet address, and I know the private key, and it's not registered with the government. As far as I know, the government can't ban me from hodling this any more than they can ban me from holding gold. They'd have to come find the physical key. As long as you hold your crypto outside of an exchange, you can do with it as you please. Of course, they could say don't accept money that comes from a wallet that they know you own, but the person that you're sending the crypto to would have to agree to that as well. So if you're looking to protect yourself and the people you do business with from the government's overreach, having a hardware wallet and keeping your crypto there might be the only way to go. Enough of the doom and gloom. The second story bodes well for the future of crypto and possibly indicates a shift in the world's reserve currencies as we know them. Right now, the US dollar is the world's reserve currency. That means for international transactions that take place with different currencies, often the US dollar is used as an intermediary. This is the case in about 51% of all transactions of this type around the world. So we say that the US dollar is the world's reserve currency. This all started in the 1970s under Nixon when the US went off the gold standard for the last time. In order to prevent the dollar from falling to zero, the US signed agreements with Saudi Arabia and eventually the other OPEC nations to only accept US dollars for oil. This gave some value to the dollar because it was tied to the most purchases of oil, and it became the petrodollar. Russia isn't an OPEC country, but they've generally stuck to accepting US dollars or euros for oil for the last few decades. A story has come out right from the top in Russia that could signal the start of using Bitcoin as a sort of reserve currency. Russia will accept Bitcoin for natural gas and probably for oil. So is this the Bretton Woods Part 3? Is this the beginning of a new world order? Are we now going to trade in Bitcoin internationally, and does this mean the US dollar is about to collapse? Maybe. Probably not right away, but I think it's certainly a start, and we have to prepare for it. Here's the gist. Russia has stated that they will accept Bitcoin and gold as payment for natural gas, and soon potentially even oil. That's big news because previously they only accepted rubles, US dollars, and euros. Why is this big news? Well, if Russia stops accepting euros and US dollars, and they really can't accept them right now anyways because of sanctions, it could mean that a significant volume of transactions internationally start taking place in different currencies from the US dollar. Russia produces 12% of the world's oil, and 2/5 of European oil come from Russia. 45% of European natural gas also comes from Russia. China is heavily reliant on Russian oil and natural gas. If China, Europe, and other countries start trading for Russian oil and natural gas using Bitcoin instead of US dollars and euros, that could really change the balance of power for reserve currency status. This change could drive up the price of Bitcoin as it links the cryptocurrency to a commodity that is used internationally. Russia currently has a contract with Europe to pay for oil with euros, but given the present sanctions, it seems unlikely that Russia will keep up its end of the bargain and may start to demand other currencies or hard assets as payment for its oil. Despite all the promises from countries around the world to shift to renewable energy, the reality is that oil and natural gas still make up the vast majority of energy used, and the amount of oil and natural gas used is only increasing. Peak demand won't occur until developing countries stop growing and until renewable energy is both cheaper to create and as easy to transport as oil. Neither of these things are true right now, so there's bound to be continued demand for oil. With the US and Europe desperately trying to sever dollar and euro ties to Russia, there is more and more incentive for Russia to use other currency alternatives to transact in. Not only is there more incentive for Russia, but there's also more incentive for countries that rely on Russian oil to stockpile assets that they can use to pay for the oil. I've mentioned it in previous videos, but we're entering the endgame for the US dollar as the world's reserve currency. Throughout history, all fiat currencies have gone to zero, and the Canadian and US dollars likely will not be any exception to that rule. Canada is moving in a direction to try to protect the power of the Canadian dollar, but will it work in the long run? If the brilliant global macro investor Ray Dalio is right, we're in for an incredible shift in world order over the coming years. If you want to understand that shift and profit from it, click on this video here, where I cover what Ray Dalio is predicting, how it could impact your portfolio, and how you can use the coming changes to grow your wealth. Let me know what you think down in the comments below. Will Canada's bid to control and regulate cryptocurrencies prolong the existence of the Canadian dollar? Will Russia accepting Bitcoin hasten the fall of the US dollar as the world's reserve currency? In time, we'll know for sure. But for now, that's all. We'll talk to you all in the next one. Peace.